Hello ladies and gentlemen, my name is Greg Mikulowski from ForexLive.com. Today's date is July 27, 2022. It is also FOMC day. That means at 2 p.m. ET the FOMC will make the interest rate decision for the current meeting. The expectations are for a 75 basis point hike. If you want a full preview of what the FOMC is likely to do, you can go to our website at ForexLive.com, and if you come over to this area right here, must read, you can either click on this FOMC video preview or this one that actually leads you to the same video that Adam did on the for the FOMC preview. Just click on that point and it'll take you to our YouTube channel where you can watch the video. By the way, there's also some other educational videos there that I've been posting, including this one here today. So please go there, and if you like the videos, give a thumbs up. If you don't like the videos, you can put thumbs down as well and share them or comment on them or whatever you want to do. Free to do. So with that said, let's take a look at some of the markets here. On an FOMC rate decision day, followed by the press conference, which will take place at 2:30 with Chair Powell, there tends to be more volatility. Okay, so the risks increase. When risks increase, you have a decision to make. Do you want to participate in that more risky environment, or do you want to sit it out? It's your choice, not my money, but be sure to use proper money management, risking 1-2% on the trade maximum. Also know your levels, okay? So that's what I'm going to focus on here today in some of the major currency pairs, and focus in my posts all the way up to the FOMC decision at 2 p.m. So pay attention to that at ForexLive.com. Let's take a look at the euro versus US dollar, and what we see here is that the currency pair moved to the downside yesterday after failing to get above the 50% retracement that moved down from the June 27th high to the July 14th low. We've been talking about that quite extensively over the last week, more than a week. How the price needed to get above the 50% retracement level going forward in order to give the buyers more positive spirit, positive momentum, and the market has not been able to do that in trading this week, Monday, Tuesday, and Wednesday. The price high was Monday, lower high on Tuesday, and today we barely have a trading range here. So the market is lower than those highs, and we're also below the 100 and 200 hour moving averages. The 100 hour moving average comes in at 1.0188. The 200 hour moving average, that's the green line, comes in at 1.01766. Those are my barometers for bullish and bearish, or one of my barometers for bullish and bearish. The price is also below this trend line here, which came after it broke through the 100 bar moving average and then led to the move down below the 200 hour moving average. The high price today came up to the 200 hour moving average, tested that level, and found willing sellers against it. We currently trade at 1.0144, about 35 pips away from that 200 hour moving average. So if on a more dovish FOMC statement and rate decision, it's really going to be in the comments, because they're probably going to raise rates by 75 basis points. But on a more dovish forward guidance statements, then we could a move above the 200, move above the 100 hour moving average would give the buys a tilt back to the upside here after the break below yesterday, and we'd have traders once again looking for the 50% retracement. That's just the way it is. Okay, so we might give a pause at the underside of the broken trend line through here, and then we're going to need to get above that level. On the downside, traders would be encouraged on a break below the 50% retracement this way. Okay, this is of the move off the low to the high. The 50% of that move was tested and broken briefly yesterday, but then reestablished support against that 50% level at 1.0114. That is about 35 pips away from maybe 30 pips away from the current level as well. If we break below that level, then traders will look toward the 61.8% of the same move, which also corresponds with this swing area here, swing low, swing highs, so on and so forth through here. That level comes in near 100.76 and break below that level and opens up the door for the extreme area, which is our extreme lows for the month of July, which took the price down to below around the parity level here near 0.9997, and our low price for the year for the last 20 years or so comes in at 0.9950 or 51, somewhere around that level, and that would be another target on the downside. So we know our levels here in the euro versus US dollar. We've been talking about them for quite some time, so earmark those levels, mark them on your trading charts, and be sure to understand the risks and the biases through the FOMC decision. The dollar versus yen has been trying to move back to the upside over the last few trading days after the sharp move to the downside on Friday. Took the price below this trend line briefly, and then reestablished support near that trend line. In trading yesterday, the price sniffed it but didn't really get close. Today we're even further away from that trend line on the dip to the downside. We also stayed above this swing area, which was an old swing area, high little break right here that failed, then came up and broke through that, and then reestablished the level right there. That gives it its importance, this area. Admittedly, we traded above and below it through the trading this week, but we did find support buyers against the level here today, and we're trying to get above the 100-hour moving average of 136.856. The dollar versus yen tends to react to interest rates, changes in interest rates. If we do get more dovish Fed, the idea that maybe inflation may be coming down or they expect it, then we could see the price start to move back to the downside here. If we continue to hear more hawkish tones from the Fed, we could see a move toward the 200-hour moving average, the 50% retracement of this move to the downside that comes in near 137.46. The 200-hour moving average is a little bit higher, near 137.53, and moving lower, so it'll be closer to the 50% retracement come Fed time. Get above that level, and it opens up the door for further upside in the dollar versus yen. On the downside, obviously, getting below this this level right here near 135.91, which was then support after the failed break to the downside, and then below the low from last Friday at 135.55, would open up the door for further momentum toward swing lows here, swing low, swing low, swing low. All these swing lows through here would be downside targets for the dollar versus yen. Let's take a look at the sterling versus US dollar, and what we see here is a pretty solid ceiling here developing at 120.897. Now I've been using this high right here, and which was the start of this trend move to the downside. But if you were to, or if I were to, or you too, move the Fibonacci retracement up to this level through here, what you can see is that the high prices that we've seen over the last 3 trading days have been stalling right near the 50% midpoint of this this move to the downside, this bigger move to the downside. Maybe it was remiss in me doing that. Maybe I should have looked at that as well, but it's clear that the 50% retracement near the 1.2085825 is stalling, is a stall point or a stall area for the currency pair in trading this week. So they're getting above that level, and above the ceiling now would be obviously a bullish bias move for this currency pair. On the downside, the 100 and 200-hour moving averages are below, and in trading on last Friday, the price did find support against that level, moved higher, and again in trading yesterday, the price not only tested this trend line but also tested the 200-hour moving average. So it's the dynamics are still the same on the downside today for that currency pair. Trend line, 200-hour moving average, move below both of those levels opens the door for further downside momentum. We would then look for to get through the swing low from yesterday and Monday, which could both come in near the 1.1961 level as the next target to open up the downside. Overall for this week, if you take 1, 2, 3 trading days, the trading range is fairly narrow, isn't it? It's from 1.1961 to 1.2089-ish type area. So only about 127 or 8 pips in trading. That is likely to be extended between now and the end of the week. So be aware of a break either to the upside or to the upside or to the downside for the dollar versus sterling versus US dollar. So that's a look at it. First three currency pairs. Again, I'll be looking at other currency pairs in the post today. May post another video before the FOMC rate decision, but the three main ones, the euro versus US dollar, dollar versus yen, and sterling versus US dollar, outlined in this report. Good fortune with your trading. Remember, volatility is increased, risk is increased. So trade cautiously, know your levels. Good fortune with your trading. Bye-bye now.